Welcome to the Airmere Roundtable. Today is the 11th of May, 2021. So welcome everyone. I have a good friend and one of our the experts at Airmere, Dave Thomas, with us. So welcome, Dave. Nice to have you back on a roundtable.
Thanks very much, Tom. Pleasure to be here.
Yeah, I guess you're going to update us on the Dreamlifter changes and how it's kind of morphed. I think you're on version 2 or 3 now, so looking forward to it.
Good.
And I'll be here in the background. I'll just mute myself so there's no background interruptions, but I'll be here monitoring and popping in if I need to.
Okay, yeah, if any questions come in, feel free to just interrupt and I can just handle them as kind of as they are as we go forward.
Yep, will do.
Okay, well, good. Well, good morning, everybody. Just start off with, this is Airmere's classic disclosure, which everyone has seen probably a million times, but just really quick, obviously Airmere is not a broker-dealer, investment advisor. These webinars and seminars given by Airmere are for educational purposes only. Options and futures involve risk and are not suitable for all investors. Of course, past performance is not necessarily indicative of future results. And you can read all the rest of the stuff, and so to be able to see kind of where we are as far as legalities here. So, but anyway, this is nothing new. Everyone's seen this a million times. So. So anyway, so why don't we start off, and actually, Tom, I'm actually going to get out of my, well, actually, let's go, let's see. So maybe we'll just start off with, for people here that maybe don't know me, this is a slide that I used about a year ago and figured it was good, that just kind of, in case there's anybody new out here, I started about 2008, began with a phone call actually to Tom, when he used to be at Sheridan Mentoring, but I think at that time, Tom, I think you were in Germany at the time.
Yep, we sure were. And just real quick, can you pop that into like presenter mode so that you're just seeing that one slide?
Oh, is that not what you're seeing?
Well, I'm seeing this slide plus some slide controls and the next slide.
Oh, okay.
That in the lower right, next to the where the zoom, there's the icon just to the very left. It's like a little monitor.
Just normal?
No, not that one. To the right 3. That one. Yeah, click on that.
Okay, how's that?
Well, it's still kind of the.
I see it as just the one slide on my screen.
Oh, you're probably sharing a different screen then, I'm guessing.
Oh, okay. So let's change that then. Let me show you.
Benjamin says click display settings.
Okay.
Display settings.
I don't know. Is it, I mean, in PowerPoint or with?
It must be in PowerPoint.
Okay. So sorry about the technical issues there, guys, as far as the presentation, but it's a little sharing, trying to figure out which one is the right screen. But anyway, just it's okay. We'll just kind of go and kind of, you'll see some of the upcoming slides here, so that's okay.
So basically, we were like, yeah, I was in Germany when you had that phone call back in 2008.
Yeah, and so that's where kind of things started with Tom, with Sheridan Mentoring, and soon thereafter started out with their mentoring program, and that started in early 2009. And I was fortunate to have one of our fellow members here now, Dan Harvey, which I'm sure everybody knows. And so I was lucky to have my initial mentoring with him, which was for about 6 months. And then started to go from there and started to trade with within the knowledge that I'd learned from the Sheridan Mentoring. And then at one of the Dan Sheridan reunions, I had actually ran into John Locke, and that kind of started a discussion, which ended up then doing kind of further mentoring with John around 2011. Around 2015, John asked me to join him as a team to mentor some students, and that lasted for about 5 or 6 years, and which was a fantastic experience to be able to go and do that, and taught a little bit over about 100 different students over the course of 5 years in all the disciplines of options trading. And then Tom and I started chatting a little bit over a year ago, and we decided to say, hey, we've done good with some trade alert services, and we said, hey, we had this Dreamlifter trade, and said, hey, why don't we start that? So we started that last June, the end of June of last year. So if someone wants to know where does the Dreamlifter come from, if you can see, there's a small picture here, but this is actually the back the back of my garage, and this was the Dreamlifter flying right over my house. And if you, the plane is actually quite large, as you can see. It's actually this plane right here called the Dreamlifter, and this is actually used to transport parts for the Dreamliner for Boeing. And this plane flies. These have been in existence for quite some time, but it's a modified 747. And they literally still fly right over my house. So when they do, you know it. The interesting thing is, just like the Dreamlifter now has, I thought this was an interesting segue, as the Dreamlifter, has morphed into different things as far as what they're doing with it. Now I've noticed recently that we don't hear it too often. And what I found out just recently, just literally within a couple of weeks ago, is they've actually transferred, or in the process of transferring, all their operations from Washington here in Everett down to South Carolina. So, so we won't be seeing this too often.
I did not know that.
Yeah, it's just shifted. So, so as you can see, the facts, the facts in this case, they do change. And even the the origination of the trade in and of itself. Okay, so I thought I'd kind of go over and say, let's take, everybody is saying, hey, look, let's get down to the brass tacks here, and let's take a look at what's happened. Okay, so when I took a look at this and saying, okay, everybody wants to kind of look at your performance and say, all right, well, let's do that. So as and take the good and the good and the bad with it. And we say here, okay, the trade started on June 29th, 2020. You could say, oh, wow, winning percentage, 3 out of 5 trades, 60%, not bad. First 3 trades up over 10% in 9 weeks, average days in trade about 23 days. So, when things started off, it looked really, really good. But the next 2 trades over the next 12 weeks was down about 10%. And those were in an average of about 60 days, because this Dreamliner trade, you started at 80 DTE. So, the final tally, we were down a little bit of money after, right around the middle of December. So I made the decision to basically go and pause. And as I say, pause and pivot to in this case, to the flex trade, which we had started right around the end of November in the SPX. Well, we eventually get to the SPX. We started in the rut, but we also moved that over to the SPX while performing a post-mortem to the Dreamlifter losing trades, these last 2 trades. And I want to say, hey, I need to determine what has changed, if anything. Okay, so one of the things that that I looked at, I'm not sure if this is going to work, Tom, but I'm going to try to go to see if this actually works. Now, can you still see my? Actually, can you see my Thinkorswim now?
No, I just see the facts.
Okay, well, that's interesting. Okay, so I'm going to have to do a new share here, I guess. And let's see if you can see this.
Okay. And now I think see Thinkorswim.
Okay. All right. So what I thought I'd give everybody a perspective is that if you take a look at the rut here and say, okay, what has changed? Okay, I thought it'd be appropriate to say, okay, we started this. So this is the whole COVID experience last year, starting February 2020 and all the way. But if you take a look at when we started, if you take a look at this last time period, this is basically the time period that we were running up until about mid-December is when we were running Dreamlifter. So if you kind of take a look at this kind of time period right here, this is the time period that was the life of the Dreamlifter as those first 5 trades that we just talked about. We started them right back here, right around the end of June, right about here, about June 29th, okay? And we ran those until, we kind of moseyed the market until around mid-September. And those are the first 3 trades that were all winning trades. Okay, you need to see the market was, kind of up and, a little back and down and, not craziness. Okay. The trades that we put on, those 2 trades that I started September 14th, that lasted until about November 14th. Okay. We were up almost about 200 points. Okay. From the start of the trade to there. And then the secondary trade, we started right around the middle of October. And we took off right around the end of December. Here's where we ended up. So if you can see in both instances, just from the very macro level, we had, as compared to the first 3 months where it was pretty calm and we had, some up and down, here we basically just had a constant, pretty much a constant up, except for this little turn right here. But then it was just kind of going. And so we had these instances where when I went and looked back into those trades, the common trait was that we had a market that basically went, and as per the Dreamlifter rules, is that, once you made small revisions to it as the market went up, but you're more relating to some kind of market reversion or mean regression. And so when you get a situation where the market actually goes up fairly quickly and then sits there, what happened with the trade is that those just ended up losing because there was, it was outside of the, you're usually getting some back and forth movement, okay? And you don't, normally it would be okay, but it's to the extent of the size of this move, okay? So, when you kind of take a look, so from that standpoint, it was, I looked at that and said, okay, what do I need to do to look at that plus other factors that I looked at to say, okay, what are the things here that would be better if I modified things, and then take that information and go back to back testing and see where we could get. Okay, so Tom, I'm going to stop share again and see if I can just then go to the other screen. See if we can get this. Let's see if we can.
Okay, now I see the facts.
Okay, and the question is, can you still see just the facts?
Well, I see the facts and then the next animation.
Okay, so you're seeing just one screen?
Well, I see it's kind of split a little bit, like a presenter mode.
Okay,
Yeah.
all right. So
anyway,
for some reason,
yeah, it's good.
Okay, so basically, is where we are. Okay, so basically, what I did is I said, okay, after I did the post-mortem, okay, I took the results and I back tested it. Okay, so after post-mortem is basically something that is kind of, I've used that term for a long time, is basically saying, hey, if you have some trouble with trades, you go in, take a look at them, figure out what's going on, understand, did anything change, if anything, and then go and then analyze it and try to come up with some thoughts as to, how it could be done better, okay? But to try to not form fit those specific changes, because you don't know how it's going to affect, many of the trades, okay? So what you have to do is, when you come up with new concepts in trade design, at least the way that I was taught by my mentors over the years, is, if you come up with new thoughts, that's fine, but then you have to go back in and backtest over the total time period that you're talking about, not just over the two trades that lost. You got to go in over the whole entire time period. So what I did is that I said, okay, I went and backtested and I said, let's just go back to the start. So I went right back to the start of June 29th, and which was the start of the Dreamlifter to the current time. And what I found out was the results were about 5% per trade profit average, okay? When you actually when I looked at further enhancing with utilizing some of the flex concepts that we did, if the trade ended up trading beyond, so in other words, if we're starting the trade around 40 days, if we're 30 days into the trade and we're still having some issues and that we still have some time left and you decide to continue, okay, if we utilize some flex concepts for just the last 10 days, okay, or the time at least to be able to get up to the profit goal, what I found is that I could increase the results by about 1%, from about 5 to 6, okay? The average time in the trades, they were about 16 days for Dreamlifter, using the kind of the standard 5% here, or if you went into those last 10 days when you needed to, and you hadn't got to your profit goal yet, and you utilize some of the flex concepts, then you bumped it up about another 6 days, from about 16 to 22 days, when you added in the flex concepts to then be able to get up to your profit average, okay? So we could say, okay, what actually changed, okay? So what I did here is I tried to put a little comparison where I said Dreamlifter, I guess original or whatever you want to call it, and then Dreamlifter revised, okay? And these are not all, but these are some of the things that changed, okay? The key things is, before The Dreamlifter was at an 80 DTE entry, where I changed it to a 40. Went from a profit goal of, instead of trying to get a higher number, 2,500, I actually reduced it to 1,000 in an effort to try to get, as I would say, more times up to bat. And hopefully trying to also reduce the amount of days in trade, okay? So, and Dreamlifter, what I found was that our starting capital, because of the time frame that we're in, we usually were starting off capital with a fairly low number, right around 8,000. And that was because, butterflies are fairly cheap. And so I wanted to make sure that I revised that, and I wanted to start with capital that were at least a little bit under 20,000. So I put here somewhere between 17 to 19K, okay? And that was to be able to get as much capital in and not start at this much reduced capital level when you're out at the 80 DTE mark, okay? What other, we used to have a standard 10 lot broken wing butterfly. This now we changed to a variable lot broken wing butterfly, okay? So it could be a 10 lot, could be 11, 12, 13, 14, 15, could be, or that's at least what I found within the time frame that I did, it was somewhere between 10 and 15. And part of that was all trying to blend in together the capital, and trying to get the capital up there while changing the quantity of contracts or butterflies that you're putting on. The original Dreamlifter, there was really no upside adjustments there were upside adjustments, minor ones, but if there's a major market movement, like I just showed you on the screen, which I'm looking at somewhere around in the 100, 150, 200 points, what I found with the original Dreamlifter is that's where it basically sat and then it died. Okay, you're basically hoping that the trade would come back. Okay. And in many instances, it would over the long time period. But when you had these major market movements was the issue. And that's what happened within those two trades. So what I did is I came up with a new upside reset due to when you have these major market movements. And I've got my own rules around when to do it and how much and where you place it and all that kind of stuff. When you do all that stuff, what I found is I ended up with the original Dreamlifter and all the back testing that I did going back, over about 10 years. The average is about 2.6% average trade return, which was in this case, for Dreamlifter was about 32% a year. Okay. What I found within the time frame that I did the Dreamlifter was basically going back to when we started was about with these new rule sets was about a 5% average trade return. Okay. And one of the other things that was also revised was on a daily basis. Okay. I did have a downside risk assessment every day within the original Dreamlifter, but now I've revised that. So I'm having a new downside risk assessment. And some of these things, like I said, came from some of my flex concepts, okay, because we're only in a 3 to 4 to 5 day trade, downside risk is a big issue. And so you have to have some significant procedures in place to be able to deal with that, okay, and rolling procedures, okay. So that's pretty much what the changes were. There were, or at least the basics, okay. There's a lot more details behind that, as you can imagine. But this is I guess the ones that I wanted to share. So at least just kind of some of the highlight, issues, okay. But the big thing was showing, what it actually did. It was almost a doubling of the trade return, with at least within the time frame that we looked at. And if you take a look at, these were 5% average trade return when the actual Dreamlifter with actual results actually ended up, like I said, we were down about $850 over the first, 6 months of trades. So this was a, significant improvement for sure. Okay. So I thought probably the best thing from there, Tom, unless there's any questions, is just to go right into a trade example, and we can kind of, I think sometimes that's the best way to show it.
Yeah, no questions yet.
Okay, great. So let me go here, and Tom, tell me if you can see my screen and see if you can see O&E.
Not yet.
Not yet. Oh, this is fascinating. Okay. So I'm going to stop sharing and try to find this screen.
Okay.
Very interesting.
Yeah, we were still seeing PowerPoint.
Okay, so let's see. Let me try this one.
Yep.
Okay, great.
Marcus says, Dave, how do you calculate returns on the trade?
returns on the trade was actually, just dollars, profit dollars divided by the margin, the capital that I used in the trade, max capital margin. So it was profit dollars over max capital margin used in the trade.
So it wasn't the planned capital, it was the,
Exactly.
the margin, yeah.
Right, which usually basically, I always use so for example, for most of the time, it's actually, the trades are around 20,000 margin, okay? But if you take a look at the, sometimes it'll range somewhere between about 17 to 25 or so, depending upon the amount of changes. So for accuracy purposes, I always, if the plan was, my plan is usually for 20, but sometimes it can go a little bit higher, okay? So if it is, I want to make sure that I use that, because if you needed that margin for the trade, you have to account for it. So it's always on the, the maximum used at any time. Okay. So here's a trade example. So this is my account here, Dreamlifter 40 DTE. So these are the new trades, and I've, as you can see here, there's actually maybe a appropriate thing here is, let me go into, so let's see, this will be interesting, Tom. Now, can you see this, Tom, what I just put up the reports page?
No, I'm looking at the like
Just
the risk graph and the matrix.
Okay, very interesting. This is let me see if I can just do a new share and see if this is.
Are you sharing your desktop or an app?
I don't know what I just.
Oh, there it is.
Okay, so I tried a new share here. So, so do you only see just the report page now, or did you see O&E behind it?
I see O&E behind it.
Okay, good. Well, maybe we're on the right page now. So we'll give this a shot. So here's the summary. Okay, before we get into the details, okay, here's the summary. Okay, and what I'm showing here basically is starting the trade back at the original time for Dreamlifter back on June 29th. Okay, and what I did is this is my actual back testing. Okay, which is right from June 29th to current. Okay, so the trade that's on here is still on. Okay, it's okay. So basically you can see the results. And, the crazy thing about this is that I really felt bad about this because, I looked at this and I said, oh, this is the worst thing to show people, because what does it show? It's all wins, which in real life, there's never going to be that case, so, sure, the great equity curve, and all that kind of stuff. But it's, if anything, I wanted to be able to kind of show you some of the details here of, obviously, you looked at the profits, that's right around, somewhere between about 5 and 6%. Okay, because these I did actually, I included here is that if I went beyond that, I did use the flex concepts if the trade had to go into those last 10 days before expiration. Okay, so for example, the first one of those would have been this one right here. So you'll see that we had 35 days in the trade. Well, the next one was 37 days in the trade. So that's a situation where all of those trades, it got to 10 DTE, and then I utilized some flex concepts to be able to, get the trade better than what it was at that point. What I had found was that if I would have not done that and just left it at that point, the results, basically, that's where the results, where I would have showed that where this net result would have been about 5% per trade average, as opposed to about the 6% that I got when I used the flex. Okay, so if some people say, well, hey, maybe I don't want to go in and use those flex concepts for those last 10 days. I just want to keep with the Dreamlifter, and that's okay. That could be done. What the results would be based on what you see here is, I think there's 3 trades. There's this one here, the one that's 35, 37, and this one 41 that I actually went in. 2 out of the 3 of these trades, okay, the net result of this is that this would be about a $1,500 reduction in P&L, okay, which accounts for the difference between about 5 and 6%, okay. So the good news is that if you did just use the Dreamlifter concept and you didn't use the last 10 days for flex, it would average, like I said, about 5% a trade overall for the whole entire time period that I did right here, okay. So, and if there's no other questions on that, I mean, this is You can see the risk that was used on the various trades. Some trades were as little as 3 days, 4 days. You can see the days in trade, and the average over this total thing. Like I said, if you did it just with the Dreamlifter, it was about 16 days. If you include it all for total, it was about 22 days. And you can see the risk here ranged anywhere from about 17,000 to a high of, this one was almost 26,000, or a little bit over 26,000. And this is because of having to do some things right in those last days before expiration. Okay. So, Tom, let me know if hopefully you can still see now, if we did this correctly. Can you still see my O&E now?
I do, and there's no questions.
Okay, great, great. So what I wanted to do here, everybody, is take the last bit. We got about, I want to reserve some time at the end for questions, but I wanted to kind of go through here and make sure that people actually are seeing what was really happening, okay? Because I thought of no other better way. You can see slides, you can see all the stuff, but the best thing is, let's get into a live trade. So this is one of the ones that I just showed you on the report here. It's this one right here, starting on July 6th, this trade right here. So this is a trade that I was in 18 days, put it on the 6th, took it off on the 24th. It was about 18 days of the trade. It was up about a little bit over 5%. What I thought would be a good idea is actually, let's go through the details of that, okay? And I chose this one because it was one that there wasn't that many modifications to it, okay? So here we are. So here's the start of the trade, always trade entry. In this case, when I said it was 40 days, 40 days is always, it's, plus or minus a few days. To be able to go through, and I wanted to start this right as soon as the last trade finished. So as soon as the last trade finished, as you can see here, let me just go back again. The first trade ended here on July 2nd. Okay, so then we had the holiday weekend. So the next available trading day was the 6th. Okay, so that's why we got July 6th. I looked around and I said, okay, what's available here? Well, we've got 32 days DTE, we got 39, and we got 46. Okay, so given the choice of these, I would choose the one closest to 40. Okay, if it's a few days over, a few days under, really doesn't matter. Okay, whatever the one is closest to 40. And here's a situation where you get weekly expiration cycles, and then this one's a monthly expiration cycle. Doesn't matter. You can put it in the weekly, you can put it in the monthly, you can put it in a quarterly, doesn't matter. Whatever is the one that's closest to around 40 days. I tend not to do as many, well, quarterlies are only available 4 times a year. So the availability to do those is not as often, but most of the time we're doing these in the weeklies just because you've got more of those available to you. Okay, so what I'm going to do here is I'm going to start off with saying, okay, typical, we were usually about 20 to 30 points under the money. So right here, we're about 1440, 175 right here. And I did these all at 12:30 Pacific time. So I put the trade on in the rut, 1420, typical broken wing butterfly. In this case, it's what I chose, and all of my original was still a 60-point wing on the downside, and then a variable width on the upside based upon the what the market's doing. Okay, and that's when I said, variable. It's a variable size. In other words, this could be 10, 11, 12, 13, 14, 15 amount of contracts, but then that's the number of contracts. But then the placement of these longs here is always relative to the overall position delta, which is, as you can see right here, is about +1. Okay. So what I'm always looking at is, basically starting off, pretty flat. Okay, as flat as you can get, and it's usually, plus or minus a point or two as far as delta is concerned. So if I needed to, and this wasn't like that, okay, I could always go and say, okay, let's move one up here and say, okay, I could have done this a 14-1 and had -1.5 delta. That would have been fine too. Okay, no problem at all. But you can just play around with these upper longs, wing widths. Okay, in this case, it's 10, 20, 30, 40, 50. Okay, a 50-point wing on the top side, 60 on the bottom. Okay, so so that's all variable to what you want to do to be able to set this up. And so once you have that set up, and the other key point is, you notice down here what the current margin is, 19,860. I'm trying to balance 3 things here. Okay, well, actually 4 things: current margin, delta, the position away from the current market. This one, in this case, it's between 20 and 30. So, it's 21.75 points below the market at this point. The number of contracts and the amount of contracts in the upper longs. When you kind of put all those things together, okay, you have to do, a bit of trial and error as far as this, okay, as far as all of those things I just mentioned: the overall delta, the margin, the placement of this. And sometimes you'd work this out and say, okay, well, if the market is pretty excited, like a day like today, for sure, first off, probably, some people look at today and say, wow, what a fantastic day to enter, because the volatilities are up and you're going to get great pricing. That's true, okay? But the thing is that, with this kind of a trade, I leave a little bit of variability where in this particular case, if it's 21 points or 31 points, those are both okay. So I could put this on at either 14.20 or 14.10 in this particular case. And if you do that, then some of these things would change, okay? So you just kind of go through a trial and error, and until you get all that, as Tom would say, it's kind of like being in the cockpit. You get all these dials and you got to dial all these things in, before you take off. So here you get all these things dialed in, the distance away, the number of contracts, your overall delta, the margin, putting all those things together. And what this does is this compensates for something that I used to use in some other trades that I used to do that used to account for volatility in the market. And when you're accounting for, because ultimately all of the issues with volatility all end up in the price, okay? Ultimately, it's in the price of the contracts, okay? So when you take that all into account, this is what I used to call it, a kind of a variable concept of how to start the trade. And like I said, there's many other trades, at least that I've traded in the past, that use some sort of variability concept to take account for volatility changes when you're doing the trade. So let's pop right to the first. What I'm going to do is I'm going to just hit the next key up here and just pop right to the first adjustment. Okay, I'm going to hit the ignore trade down here so you can show you what's happening before. So you can see there's a hidden trade here. So basically, here's just a couple of days, just 2 days into the trade, and what's happened. Let's say, okay, the market has come down a little bit. We're sitting here at about +8 delta. Obviously, the margin is the same since we haven't done anything. And so basically what I look at here, okay, is one of the key things, and one of the differences that I told you was that there's a daily look as to downside risk and actually upside risk as well. And what I do is that I take a look at where the market is right here. Again, this is at 12:30. And what I take a look at is 50 points up and down, okay? And you may ask the question, why 50 points? Well, recently I had a friend of mine who some people know, but I'll put his name out there, but everybody knows Tim Pearson, who also does a trade alert service for the boxcar. We're very good friends, and actually we live very close to each other. So we've been friends for, many, many years, certainly all of our trading career. And so we chat often, and I came up with some thoughts to Tim as to what I would love to see in some analysis graphs on Thinkorswim. And unfortunately, I don't know how to write ThinkScript, but Tim does, and he saw the goodness in it, and he was able to help me out, and he was able to utilize the graphs himself. And what we found was that we looked at, just like today, as everyone probably saw with the SPX and with the RUT and with the NASDAQ and with the, we had a huge gap this morning, okay? I don't know what the market's doing right at the moment, but we had a huge gap to start off this morning. And what we did is that I found with the SPX over a long period of time, when I say long period of time, I'm talking about, 10, 20 years, utilizing the graphs that we saw, I could see basically what the amount of gap would be typically between the close of the prior day to the opening of the next day. Okay, so that was able to be coded, software coded, and utilizing ThinkScript into code that was able to then portray on the screen exactly what it was. And what, when you summarize it and you look at it over a long kind of time period, what was most of the time is where you really found, and what we agreed to is it was basically about 1.5% of where the SPX was. And that's basically somewhere between 40 to 60 points of a gap, which would be kind of like, that would be something that would be kind of a worst case. Not the absolute worst case, because we've had worse than that, but we had a couple of instances where it went worse than that, okay? But accounting for well over 95% of the time, the 1.5% figure held. And that was about approximately where we looked at it, the average was about, drum roll, was about 50 points. So what I've utilized for that, for my flex trade, and then now also for the Dreamlifter trade, was to keep looking at about 50 points. And this was consistent, both with the RUT and also with the SPX, interestingly. So based upon that fact, okay, and data, I love data, and data is key. And so if I was able to go and determine, to be able to do that, to be able to determine that nugget of information manually would have been, I don't know who in the world would go do it, because it would take forever. But to put into software and just have it pop up on the screen is just amazing. So we utilize that information into saying, okay, on a normal day-to-day basis, I changed my concept to say, okay, every day before I go and make an observation here to say, do I need to do something? I always look at this and say 50 points up and down, where does that leave me? Okay. And so I came up with some rules around that to say, okay, what's good and what isn't, and how far can we go in either direction? It's also based upon, how many days in the trade we are. Okay. We're only 2 days into the trade here. So what generally I like to see, okay, is that I like to take a look at this and say, okay, 50 points down. So if we're at 1423 here, so 50 points down would be about, I believe, about 1373 or 1372, right around there. So I take a look at this and say, okay, we're down $1,400, okay. And actually what I also do is I'll take a look at this at T+0 and also at T+1, okay. T+1 will basically just incorporate the theta that you see here, the $137. They'll just incorporate that into this, okay. This is very much apparent when we have to deal with the flex trade, because when you're only dealing with a trade that only lasts a few days, looking at a T+1 makes a huge difference, because theta is obviously huge during those last few days of a trade. Not so much with this one when we start here at this early part of the trade. So I just looked at it at T+0 at this standpoint. But I looked at this and said, okay, 50 points down, we're at right around $1,400. And the difference between where we are projected to be right now, or where we are right now, P&L at $435 down, it's more than, the change is more than about $1,000. And what I like to see is that I don't want to have basically from today to the amount that it would be down in a day, basically I'd like to see no more than about $500, okay? So as far as the change, okay, so the change from like 435 plus 500. So I wouldn't want to see any more than around $935. So what I did is that I just did a simple roll. I'm just going to click down here to show you the difference. So I just went and I rolled 4 of these longs up. Now when I went to go check this, as you can see right around the same thing at 1372, notice that the 443 plus 500 is right around 930. And so 2 things is I'm within $500 difference, and I'm less than $1,000 total. Okay, so those are some key characteristics that I put not only for the upside, but also for, not only for the downside, but also for the upside as well. Okay, so that was the modification here. Okay, so let me move on to the next day. Okay, or the next change. Okay, and this is on about a week later on July 15th. Okay, and let me unclick this. So basically the market had moved up, okay, from where it was, it had moved up. And now we got the situation where, we got a day like today, up 53 points, okay, big day up. And basically what we see in here is that we've got negative 19 delta. We're outside of the tent. So when you take some of the rules into perspective, is that if we go outside of the tent, we've got negative delta, and also well, those are, I guess the biggest things. Based upon this large move this day, and also we're 9 days into the trade, we just want to go and make a simple adjustment. And basically what we want to do is we want to get this thing to a point where we can just roll some of these down. But the key thing here, okay, there's two things that happen. If you notice here, I went from a 15, 30, 15, okay? But two key things here that I want to mention to everybody was that my first thing that I do, okay, is that I want to keep under 20,000 margin. So since we've moved up outside of the 10, we got a delta problem, but as soon as we start to move some of these things down, if I just move these things down to, let's say here, okay, and you can see we're still -9 delta. So I could say, okay, well, we need to do more than that. So maybe we need to do 3 down to here and 1 to here. Okay, well, that's still not enough. Okay, so how about if I move 2 here and 2 here? Still not enough. Okay, so let's say move, let's move all of these to here. Okay, so if we move all of these to here, we roll them down, okay, we can achieve positive delta. Okay, fine, good. Oh, but now look at margin, 22.9, we're over our 20,000. So I know that the roll down technique is not what I want to use, okay? So if I could do this and still keep within 20K margin, I would do this and still hold on to my larger amount of butterflies, okay? So let me repeat that. If I have a problem and I need to address the delta, what I would do, as you can see here, -19, and I'm outside the 10. I would first off say, okay, can I roll down and keep within 20,000 and be able to get to positive delta? If I can't do that, then I say, okay, that option's off the table, or at least to start. And I would say, okay, what I'm going to do here is actually go and reduce my amount of butterflies one at a time to find out if I can actually go and reduce the butterflies from 15, 30, 15 down to 10, 20, 10. If I can do that and not make any more adjustments to the longs, except for just removing, and achieve under $20,000 margin and achieving positive delta, then I'll do that. As you can see what we did here, and I'll just kind of quickly, you got 4 and 11, and you can see I couldn't do that. So what I had to do is I had to take 5 butterflies off and move some of those longs down to here. Okay, so we just kind of go back and forth there. So you can see 4 and 11, you can see 15 butterflies. I had to take 5 off, which would have meant all of these 4 and 1 of these. So this would have brought this down to 10. Then I had to take those 10 from 1470 and roll 4 down here to 1460 to achieve positive delta, less than 20,000 margin, and reducing the butterflies to now back down to the original 10. So we had the ability to be 9 days in the trade of almost a 50% increase in butterflies to hopefully achieve what you could get. Now, sometimes that is good. As you can see, this time we're down $1,000. So, in this case, it didn't help out, okay? But over the long term, it does, okay? So we can go from here is basically saying, okay, that's fine. So we're good from here. Let's go to the next modification. So here, a little more simple, okay? We're sitting here now, a few days have gone past, okay? Or actually 5 days, we went from the 15th to the 20th. What has happened? Basically, the market just has sat around a little back and forth, and now the market has gone from down $1,000 up to about $700, okay? Haven't done anything, okay? But here we are now, good old outside the tent. We want to keep delta where it is as far as positive. So we need to change that. So we just do a small revision here. And now that we don't have extra butterflies, the only option is to roll these things down, which you can see is 6-4, and now we got 4-6. So we just rolled 2 down. We kept within our margin. We kept delta. Okay, and usually what I do, just as a matter of procedure, I always usually limit this to a factor of 2. I don't do onesies, just moving 1 here and there. Usually I'm only just doing 2. Okay, so if 2 creates a delta of +4, sure, I could have done maybe 1 and got a little bit less positive, but not worrying about it. Okay, so let's just go to the next day here, the 21st. There was nothing to do here. It just was, the market had gone up now 19 points, but delta here was now still positive, so nothing to do. Okay, let's go to the next day, the 22nd. Okay, now we do have a trade this day. And what do we got? Same thing. Pretty simple. We're up now 875. We got negative delta. We're trying to get to, and if I originally mentioned this to you, what was one of the changes in this trade was that we're not trying to get to $2,500, which we did with the original Dreamlifter. We're actually trying to get to 1,000. So we're at 875, not quite there yet, but we need a modification. We got to get rid of this negative delta. So we just like we did last time, just roll a few more down, which we did. We just rolled 2, kept within our margin. We're up at 871. And now basically I'm just going to go here and just go 1 day to the 23rd. Okay, so we're at about 550, so not quite yet. Okay, and now what we do is go 1 more day, and I'm just changing the time frame to 1225 because now the market actually went down about 23 points this day. But you can see now that we're up over $1,000. We're 18 days in the trade, sitting right here in the kind of the sweet spot. And so what I decided to do at this point is, if it's the rule is, if you're over $1,000, take the trade. This would be Friday, July 24th. And you could see then I would immediately get into the next trade on the following next trading day. So that would be on the 27th, on July 27th. And as you can see here, just to show you, there's the next day, July 27th. I just went right into the next trade. Okay, so we just got out of this trade. And in this case, July 27th was, let's just take a peek. July 27th was right here at 12:30. And this was the start of the next trade right here. And this is not a trade that I was going to go over, but as you can see, just going right into it, as you can see here, I needed to start this trade, just to kind of a trade entry information here. I noticed this trade here was just a little slightly negative delta. Okay, in this case, -5, margins a little bit under 20,000. But in this particular case, I had 13.2. You could have gone, this is kind of trader option. You could have gone and put it like this. Okay, you could have had maybe 14.1 and had -2 delta. Okay, could have. Okay, you got some variability in here. Okay, you got some flexibility to be able to modify these just slightly. Or you could have gone -2 and 2. Where would that put us? Yeah, 0.61. But now we're over 20,000. Okay, so that's why I went and just said, okay, let's just take typical thing. Let's just take 2 and see where that brings us. And that's how it brought it to this beginning for the next trade. Okay, so anyway, so that's the trade example. The one big example, which I didn't have a chance to show here, but I'll just kind of mention it to you in kind of chatting here, is that the big thing that happened with here is that when we had the instance where the trade went up, okay, what happened is that when the trade really moves up really far, and when you enter into this kind of zone out here and you're up 100, 150, 200 points above, with the Dreamlifter at 80 DTE, there's not too much chance when you got kind of down quite a bit. When you're that far above, you're down quite a bit of money, and you just can't really recover it. So with it not doing a major reset. So I've got rules in place that basically tells me, when, how much, where, and basically I'll actually go and take the original structure here and actually reset the trade, as people within the Flex program have heard many times before. We're resetting the trade to basically be able to go and get a little bit closer to the money. Typically, we're getting into similar to what we would be doing at trade entry, but if we're less than 10 days or close to 10 days to expiration, I will then utilize a variable concept of where to actually place the trade to get in. Okay. As you can imagine, just to be a little bit, when you have less time, you want to be, typical, you want to be a little bit farther away. So, pretty reasonable kind of things. The nice thing about this all is that I went and, like I said, did all the, back testing, and just literally just went right through with those particular concepts like I just told you about. And, to my surprise, I didn't know what the outcome was going to be, but I just kind of said, let me just go back to the beginning and let's just see how it did. Okay. So, within the time frame of June 29th to December 14th right here, okay, that's 1, 2, 3, 4, 5, 6, 7, 8 trades. 8 trades, and it looks like, about an average of about $1,000, of about, you'd be up about $8,000. And the trade that I was in, we were down 800. Okay, so a pretty dramatic turnaround from going from an 80 DTE to a 40 DTE, and with all the other, and even to say, hey, I want to earn less per trade, only 1,000, not 2,500. But the consistency was there. The time in the trade was very reasonable. And like I said, if it was, many of the trades were just using the Dreamlifter, just the Dreamlifter strategy without any of the flex concepts, those lasted right up through November 6th here. There's only one that used it, and that was the one going through December 14th. So, all of these first trades, 1, 2, 3, 4, 5, 6, the first 7 trades was just completely Dreamlifter. Like I said, average of about, for this whole thing, it's about 16 days in the trade, and about average of about, 5 to 6%. Okay. So that is the final result. I was very happy to see this. I will be going and looking at putting on a trade as soon as I can. I don't know, looking at, as we look at the market here today, I don't want to switch screens here, but I'm just seeing what's going on with the market as we speak. But I can see the RUT is actually only down 9 points, and the SPX is down 36. So it looks like we're getting a bit of a recovery here. So
there was a question, Dave, but what learning did you have on the last one, with the loss, the ID 1997? It looks like it's still open.
Oh yeah, that's the one that's still open. Yeah, this is the trade that's still currently open. So it's just currently, that's just its current situation. So actually, why don't we just go to that? We'll just go right to it. So this is the, let's see, oh, we got to go live. So this is the last one on the list here. I haven't looked at it today. Okay. So let's see. So this is where it is right now. Okay. We take a look at yesterday. Let's see where we were yesterday, just at the close of the day. Okay. Yeah. So the close of the day yesterday. Okay. Yeah. Right around, well, usually when I look at this, right around 12:30. Was right around here. So, if I was to make any adjustments or whatever, it would have been, at this point right here. So, so this trade here looks like it's going to be probably the, based upon what's happening today, could very well be the, well, we'll see what happens. I mean, this trade here, I would be trading, I got, a few more trading days to go. It's right now, it's down about $850 as we sit here right now. But, given what's happened today, this would have been something where, I would have looked at this yesterday. And actually, let's take a look at this. If I go back to this and look at 12:30 yesterday, and I realize that the market went down quite a bit after this, but if I were to take a look at 12:30 yesterday and I look at about 50 points down, which 22.23 would be about 21, let's see, 21, let's see, 21.74, is that correct? Let's say I would be looking into the following day here. So I'll be using T+1, and right here at 21.70, let's say 36 and 24. Yes, it has 50 points down. So I would have looked at this and said, if we had 50 points down, we'd be down $3,500. So basically, I would have been making modifications to this trade yesterday because this would have been totally unacceptable to have that much of a drawdown the following day with a 50-point move. So I would have had to done modifications to this yesterday before the close of day. I didn't do that because I didn't have it. I couldn't trade this. I was not around really actually at that part of the day yesterday, so I'd have to go in and actually make modifications to this. Okay, so but anyway, that's where we are with the current trade. So we'll see how that works out. By the end of this week.
And then there's a question: can you show the last trade when you put it on at inception?
This trade right here.
The open one, I guess. Yeah.
Sure. Let's see. Let me just click here. This one here, 4-6. Let me just hold on a second. I'm just gonna shut my office door here. My grandson just came in. Yeah. So here's this was the trade entry as start for the latest trade, which was the one that started on April 6th. So this was the thing where I just showed everybody where it was, I switched things around to 12 and 3 to start the trade. So hopefully that answers that question, Tom.
I believe so, yeah. Yes, he said thanks.
Okay.
That's all the questions you've got.
Okay. Well, what I am going to do is like I said, we'll be looking at today. I don't know if we'll see how things look towards the latter part of the day, but if it doesn't look too exciting, we may look at actually going and entering a trade today, which would be basically looking at starting a new trade out in this time frame, which would be right in the probably this time frame right here, about 38 days. So it'd be the monthly, June 18th. So that would be the trade that we're looking at. So it kind of depends on, see how the market reacts between now and the end of the next few hours. And either that or potentially we could be just waiting till tomorrow. So no problem with that at all. Okay, we've got plenty of time in here. So for people that would like to, join in and stuff like that, obviously, there's time to be able to join up if you're not a member already, and we'd love to have you. And like I said, I'm going to be starting this trade as soon as we see the market kind of calming down a little bit from its kind of craziness that we've seen yesterday and today.
Right. So I put the link in the chat, just airmere.com/Dreamlifter, if you want to join and jump in on this updated version.
Very good. Well, I thank everybody for being here, and thank you for the questions that came in. Great questions. And I hope that this, for anybody that's within the trade alert service, obviously we've got 3 trades currently. One is this Dreamlifter, the new Dreamlifter 40 DTE trade, the Flex trade, which is a weekly trade, which is typically about a 4 to 5 day, usually kind of entered on a Monday and get out on a Friday typically. Okay. But then we also have a bull trade called the Palm Desert, which is just in the rut. The other 2 are in the flex trades in the SPX currently, but we have also the ability to go back and forth between Russell and SPX. So we basically get all those 3 trades. The bull trade is more of a probability trade, no adjustments at all, especially put it on and take it off. We've only done 1 trade so far, or we've 1 completed trade, which was a winner so far. We got 1 that's currently on, which, as you can imagine, it's struggling because we're down about 100 points from where we put it on. So, but it does have plenty of time to be left on the trade. So those trades are available. Those are all part currently within the Dreamlifter, Flex Trade Alert service. So all those 3 are available for the time period now. So we'll just want to make sure people are aware of that.
Awesome. All right, Dave, I'll get this recording posted as soon as I can, but thanks again for the peek behind the curtain, so to speak.
Okay, very good. And like I said, normally this time is slotted for our normal weekly webinar that we have for the members within the group. It's 8 o'clock on Tuesday morning Pacific time. So everybody that was, some of the people who are in the group here today were members as well as others. But this is where we get together every week and kind of go over trades and look at what's happening. And it's usually a pretty good educational session for everybody. So anyway, it's fun to be able to interact with everybody during those sessions. So
Very
look
good.
forward to that. And again, thanks for your time. And let's hope for an interesting, little less exciting market the rest of the day.
Yeah, good trading, everyone. Thanks, Dave.
Thanks, Tom.